Hello, everybody, and welcome to today's webinar with Fenix Resources. I'm Dannika Warburton. I do the investor relations for Fenix, and I'm joined today by Chairman John Welborn. We are actually coming to you live from the Southwest Connect conference in Busselton. So as you can see, the sun is shining and you might hear some birds singing in the background. I'll hand over to John now, who's going to walk us through the key investment highlights for Fenix for those new to the story before recapping on the September quarter activities.
Thanks a lot, Dannika, and a great pleasure to be joining you here from the southwest of WA in what is another good day for Fenix, having published our quarterly activities report for the September 2022 quarter. But the intro, as requested by Dannika, around a quick summary of Fenix. We're an iron ore producer. We've got a steady state production of 1.3 million tonnes per annum from the high grade, high quality iron ore body at Iron Ridge, connected by 500 kilometres of first class roadway to Fenix's port facilities at the Port of Geraldton. The September quarter was another strong operating performance that demonstrated the profitability of that operation. We ended the quarter with $95 million in cash, and that didn't include a $7.5 million receivable for the last shipment of the quarter, which was in late September. It's also another record for Fenix. We shipped 361,000 wet metric tonnes of high-grade product from Iron Ridge, and that's actually slightly ahead of our run rate of 1.3 million tonnes per annum on that steady state production. The quarter was also important because we consolidated 100% ownership in the Fenix New Haul haulage business, and you can already start seeing the cost savings that we're expecting flow through, and that's what drove a reduction in our C1 cash costs to $84 a wet metric tonne. And as we've explained in the quarterly, that's translated to a C1 net operating margin of just over $26 a dry metric tonne on an equivalent basis. So people can calculate the profitability of our business. We are generating strong cash flow, as evidenced by the financial results we published during the September quarter for the year ended 30 June 2022, where we generated a $50 million profit and declared another 5.25 cent fully franked dividend following the similar dividend for the previous year. That was actually paid earlier this month, so that dividend payment not included in the September quarter and the closing cash balance of $95 million. What was included was a hedging gain during that quarter of 10 million Australian dollars, demonstrating that not only do we have a very efficient mining, haulage and port shipping operation that is generating cash for Fenix, but we've also established a strong hedging position. And that quarter represents the last of the 50,000 tonnes of monthly hedges we had locked in at 230 Australian dollars a tonne. We now move into 35,000 tonnes of price protection per month, locked in at 180 Australian dollars a tonne. And as reported in the quarterly, that has a mark-to-market value currently of around 15 million Australian dollars, representing that if the iron ore price stays exactly where it is right now, we'll continue to make around the $26 C1 net operating margin, as well as bank those hedging profits. And that hedging policy, we will continue to look when appropriate and when possible to lock in our future margin. At the moment, we're obviously protected by those 35,000 tonnes a month out to June, so the end of the financial year. Looking more generally at the iron ore markets, we've seen a reduction in the iron ore price, but the other thing the quarterly will show is that we continue to outperform index pricing. And so our realised price in CFR, or China landed US dollars, was actually slightly ahead of the average 62% index price for the period of around 104 US dollars. And we've broken down in the quarterly how that relates back through our business. It's actually a very simple business. The other thing to note in the quarterly is obviously we've been actively recruiting. The September quarter also represents the last quarter of founding Managing Director Rob Briley, and we had a board meeting yesterday and had the opportunity to again congratulate Rob and thank him for his service to Fenix. He's created a fantastic business. During the quarter, we recruited a Chief Financial Officer, Stuart Osmeyer, who's joining me here in the Southwest Connect conference. Great to get him into the business. And we continue to have a very stable, very experienced management team, headed up on the mine site by Chris Tuckwell, former CEO of Macca. Adrian Third runs our port operations. And obviously, we now have Craig Mitchell, the founder of Newhaul, and the executive of Fenix Newhaul, on the board of Fenix, joining Gary Plowright and myself. So we're looking forward to further strong operating performance, and I look forward to any questions, Dan.
To kick off with, I'll start with the one that Adrian did email through earlier on the growth plans. What is the plan, for 2023?
We've indicated that we're looking at growth opportunities, and they really started obviously with the consolidation of our haulage business, Fenix Newhaul, and there are other synergistic opportunities that are the most obvious. We obviously have an enviable position in the Midwest of Western Australia in that we have storage facilities at the port, and we have the only side tipping truck unloader in Geraldton Port. And we're obviously looking at how can we leverage and expand that. The original feasibility study for the Iron Ridge operation it has almost been exactly delivered in that steady 1.3 million tonne per annum run rate. We're now starting the opportunity to look at where is there extra capacity in our system. That obviously starts with the mine site. We haven't done any significant resource or reserve expansion, exploration drilling at Iron Ridge. And we've also obviously reported on the fairly early stage exploration activities across the Ferros project, the iron ore rights we acquired off Scorpion. And there's also a number of other regional iron ore projects that we're looking at in terms of the potential to expand our resource base and then look at expanding our production base. And that starts obviously with Iron Ridge and then expands, and we're looking forward to updating the market when appropriate on those growth opportunities.
Mm-hmm. This question from Damien actually you did kind of answer it, but he's asked, what are Fenix doing in terms of trying to diversify away from being a single asset operator, if in fact that's what you intend to do?
Well, look, as I mentioned, we're starting by looking at our existing operation, a single, very efficient, very high-grade mine, but then also looking at how do we leverage our existing infrastructure solutions, being an incredibly efficient haulage network and a port operation. And so that contemplates, obviously, the opportunity for, one, expanding our existing mine, but obviously also adding other mines in the Midwest. And then, obviously, we have a very experienced team and a very good platform, a very low cost and very efficient production, mining, haulage and logistics operation. And so I would confirm that we're looking first of all at Iron Ridge and how we can either extend mine life. That's obviously around exploration, both at Iron Ridge and in the broader area that we control. The next step would be look at iron ore that we don't currently control, and can we acquire and or partner with people to use our efficient transport network. And then there are broader opportunities, and we're looking at them in that order.
Okay, so that's that one. Can you provide an update on the company's hedging activities? You touched on it in your opening remarks.
Sure. So we have a hedge book that runs alongside our production. The strategy that we employ with hedging is to lock in our margin and make sure that we have absolute 100% certainty over our fixed cost component during any particular period, and we like to keep that out a significant runway. So I mentioned that we actually have 35,000 tonnes a month hedged out to the end of the financial year on a monthly basis at an average price of 180 Australian dollars. Currently, the iron ore price is roughly around $150, so you can work out that those hedges currently are worth more than $1 million a month to us. and that will, they continue to run out. And as we get towards the early part of next year, we'll look at the market and see whether we and can be and should be extending that position. We also obviously have been pleasantly impacted by a reduction in shipping cost, and obviously our revenue is in US dollars denominated, linked to the iron ore price, but most of our costs are in Australian dollars, so the weakness in the Australian dollar actually improves our margin. In terms of looking at foreign exchange exposure and exposure to things like shipping, the update on the hedging activities is that by hedging the iron ore price in Australian dollars as we do, we actually are protecting ourselves both in terms of pure iron ore exposure, but built into that is actually obviously a shipping component, as well as effectively an Australian dollar, US dollar exchange rate hedge, and even a fuel hedge if you look at the direct. So we do manage that. It's been very efficient to date, and it's something that we're going to continue to look at. And you can see that by the fact that we actually banked $10 million during the September quarter in hedging gains. And that's obviously because, unfortunately for the broader business, we saw a decrease in iron ore prices from above $140 to around and currently even below $100. The important positive is that without the hedging, we're still making a margin at the current iron ore prices, and we'll continue to work to make sure that the business is sustainable under hopefully any forward iron ore price outlook, but particularly the hedging position both protects us from that, but also provides us with an additional revenue stream.
Yeah. Peter's asked, where do you see the iron ore price going in 2023? Do you have a view?
Well, I always say that asking any miner in any particular commodity what they think's happening in the commodity generally says that they're bullish. I will say that, having been in Singapore recently, it's interesting to see perhaps why there's an intrinsic negativity in Australia around iron ore prices, particularly in Western Australia, where our state government budget is so linked to iron ore price royalty income for the government, and as well as nationally. Certainly in a trading commodity centre like Singapore, there seems to be a little bit less pessimism in the iron ore price. It is a seasonal market. We don't try and forecast for bullish iron ore prices, but I do think that there are some opportunities for us to continue to lock in hedging at a margin, and we're quite comfortable at current iron ore prices, and in fact have, as we've demonstrated in the quarter, a buffer if they in fact go lower.
Okay, great. You touched on your recent trip to Singapore for the investor meetings. What was the general feedback and sentiment from those institutional investors?
I think everyone's, in Singapore, obviously, there's a lot of small businesses, family office funds, but also wealth that's been generated from businesses not unlike Fenix, logistics hubs. When you fly into Singapore, you obviously look out the window and see ships as far as you can see. And so they're well familiar with trading and commodities. And Fenix is a business they're very familiar with. We have very clear operations. We've demonstrated now, for more than a year, the consistency of our cost structures and the consistency of our product. And obviously, it was our first marketing trip there, but we'll go back there, and I'm confident that we'll attract investment.
Mm-hmm. Adrian's asked a question, or he said, thanks for the growth answer. Are you aware of any renewed interest in the Midwest rail that Fenix could take advantage of?
Well, if Craig Mitchell was here, he'd point out how efficient our road transport is. Obviously, there is an existing rail network that feeds into the port infrastructure at Geraldton, and that's been used by Carrara in the iron ore world, as well as historically by Mount Gibson. There's no immediate rail connection to Iron Ridge, so we don't have any immediate plans to look at rail, and nor are we confident that accessing the existing rail would actually result in a further cost saving for Fenix. But I am excited about what's happening in the Midwest region generally. The state government announced a $350 million upgrade to the Port of Geraldton. That's unrelated to the long-term plans for a major bulk commodity port north of Geraldton at Oakajee. And there continue to be a range of regional projects in development, all of which could be significant for Fenix. But in terms of rail and or the potential to expand our existing operations, we are confident that there are further savings to be made on the efficiency of our road haulage network.
Okay, and you actually recently co-hosted an event at the Geraldton Port with the Midwest Chamber of Commerce a couple of weeks ago. What does Fenix do to support the local community and the local economy?
Well, look, first of all, I was really impressed with the Chamber of Commerce and Industry in Geraldton. We had a function at the port with them. There are a number of really focused businesses and actually a very vibrant business community, of which Fenix is a key part. We do a lot to integrate with the Midwest and have created more than 200 new jobs. Obviously, our focus in local support starts with the Wadjuri Yamrigi people, the traditional owners of the land at Iron Ridge. We have an unusually high level of Indigenous employment across the company, and that's through that partnership and our ongoing focus on boosting that. A really good example of our support for the local community is port handling business owned by an Aboriginal family. That's a business that we've sponsored. We've supported them in terms of the financing for their equipment, and they're now a key contractor. And so not only do we have direct Indigenous employment in Fenix at an unusually high level in the mining industry, we've also sponsored the creation of Indigenous-owned businesses. Then there are other more general areas that we're integrated into the Midwest community. We're the sponsors of the Geraldton basketball team, the Buccaneers, unfortunately narrowly beaten in the grand final last season, but we're hoping for good things next season. Who knows, perhaps we can convince Andrew Forrest to move the Western Force to Geraldton and we'll expand those local sponsorship activities into rugby. But at this stage, we're very happy with the sport support. But most importantly, we're a key operator at the port. And in partnership with the Midwest Ports Authority, Champion Bay Electrics are a key contractor for us there, along with Schwartz Brothers. And then we have the haulage network, which employs more than 60 drivers out of Geraldton, out of Kew. And while we have a fly in, fly out component out of Perth, a lot of our employment is in and around the Geraldton region. And obviously there's a benefit downstream into the economy.
Brilliant. Well, we were aiming to keep this short and sweet because we actually have to go and manage the booth and speak to the investors inside. So thanks again for joining us today, and we look forward to keeping you updated on even more great activities from Fenix.